So psychological level or support and resistance level are just like there are specific price levels that end with significant round numbers or zeros, and these levels they act as barriers where traders and investors place their buy or sell orders, and it's just based on common human behavior. Based on psychological behavior of humans, they tend to place their buy or sell orders around a specific number ending with zeros. Okay, so you can look at a support level as a floor and a resistance level as a ceiling or a roof. Okay, so a support can also become a resistance and a resistance can become a support. So let's head on to the chart. So I'll be showing you how to draw psychological levels. Okay, so this is we are on the platform right now. So this is goal charting. This is called goal charting. So now let's draw our psychological levels. So like I said when we started, psychological levels are of round up numbers like 1.1000, 1.15000, 1.200, and so on and so forth. So if you can see here that we have the prices over here. So what you have to do is to take your horizontal line to, which is right here, click on it, and then where is the nearest psychological level? So this is 1.89500. So yeah, this is our psychological level, 1.89500. You edit, double click on it, and then 00, right? Apply. So the next one will be at where, because this is 1.8950. So the next one will be 1.900. So this is it. You click and then edit it. So the next one will be 1.90500, right? So our tool, look for it. So this is it. Edit it. Yeah. So and so on and so forth. So if you keep going, the next one will be 1.91000. So this is it. Let's just put this one here, and so you know. So that's just how to draw your psychological levels. So these are of round up numbers. They are of round up numbers. So how do you also spot your support and resistance? So this right here is a support zone right now, because it's supporting this candlestick. So if you see price came back down here, bounced to the upside, came down again, bounced up again, came down again, still bouncing up. So you draw your rectangle tool here, spotting this as a support level. Okay, because this is price is failing to break below this support level. So this is a floor. So this is acting as a floor, a temporary floor at the moment. Okay, so as you can see also here, this is a support, it's a resistance level. So this is a resistance level because price is also coming to this point and failing to break above it. Is coming up here and coming back down. It will come up, come back down, come up, come back down, come up, come back down. So what traders will do is that they will buy at the low whenever price gets to that particular support level or resistance level. So at this point, when traders see this kind of a pullback to the upside, and they now finally figure out that okay, now the market is ranging, because this is a consolidation market, is moving sideways, right? So what they will actually do is that they will buy at the top, they will sell at the top, placing their sell orders at the top. So their stop orders will be a little bit above the psychological level, just to be on the safe side and to allow the market to breathe. Okay, so their target to be at the next support level. They are targeted to be at the next support level. So when traders, because you see, when price got to this point, it came up here, failed to break up, came back down again, and it now came to retest this particular point again, failing to break above. So on this level, traders will put their stop level, their entry, they place their orders here. They place their orders here to sell this particular pair. So because this is GBP AUD. So regardless of the pair you are trading, if it's GBP USD, GBP AUD, GBP CHF, or whatever pair you are trading, they should be, their psychological levels should always be of a round number. Okay, so what as I was saying, traders will place their orders here to sell the market to the next support level. So when markets get to the next support level, giving them another confirmation to buy, which means that it's failing to also break below this support level, they will also buy from the bottom. They will buy from the bottom. So they will place their buy orders at the bottom, and they will also buy to the top, to the next resistance level, placing their stop loss a little above the psychological level, just to be on the safe side. Okay, so what traders will do is that they will buy from this support level to the upside, letting the market, to run to their take profits. And whenever they see another entry, when they see that the price is also failing to break above this support level, all they will still do is to sell from this particular place again, placing their sell orders at the same spot, putting their stop loss here. Okay, selling to the next support level. So this is just how you trade entries around support and resistance. Okay, so this can also happen on an uptrend or a downtrend. Okay, this can also happen on uptrend or a downtrend. Okay, so now let's do another example, because the one we did before was sideways for the sideways movement, right? So let's do an example. So this is like an uptrend. Let's do an uptrend. Let's do one for an uptrend. Okay. All right. So as you can see from this point, this is a psychological level, right? So price broke above this. So this was acting as a previous resistance level, but price broke above it, retesting it. So now this is now a support level. This is now acting as a support level. Okay, so when price came to this point, when it came here, there was also a resistance level at this point too. That was why price could not break above it. It had to come back to retest and to convert this one into a support level, making the previous resistance level now a support level. So what traders do is that they buy when price come to retest this support level. What they do is that they look for confirmation entries and they buy from this point to the next resistance level. So traders will always buy from the next resistance level. So just placing their buy order at this point here, placing their buy order at this point and putting their stop loss a little below the psychological level. Okay, so they will buy to the next resistance level. So now price broke above this point, but this resistance level broke above it, came back down to retest it. So now this resistance level is now acting as a support level for this move. Okay, so now it's now acting as a support level. So that's why I said a support can become a resistance, and resistance can become a support. Okay, so if you keep going, you will see that this is also a resistance level turned to a it turned to a support level. So traders will always buy at the bottom, buying into the upside. When it comes back down, buy to the upside. So this is an impulse move, correction, impulse move, correction, impulse move, correction, impulse move. So the buys should always be the impulse move, giving you more potential, giving you more advantage and profit making in the move. Okay, so for this is for an uptrend, right? So this one is for an uptrend. So let's delete this and let's do the one for a downtrend. Okay, so if you just look at it, you can also also take that one as an it also happened in a downtrend too. So this is for a downtrend. So as you can see, you see this was a resistant level. Price broke below. It was acting as a support level before, but price broke below it, came back to retest it. After retesting it, making it this one now a resistant level, price broke below this one. So this was a support level before, this was a previous support level, but price went back up to make this one a resistant level, broke below this support level here, broke below it, came back up. This one is now acting as a resistant level. So I hope you're following. This is now acting as a resistant level. So when price broke below this place again, there was also a support level at this point. There was also a support level. So this was a support level, but price broke below it, came back to retest it, and now it's acting as a resistance level. So I hope you are following, and this is just exactly what you will also see in the market, and you can take entries from this particular point. So all you can do, additional confirmations, is to draw your trend line, right? So you draw your trend line from the top, connecting the points. So this will now become very clear to you now. So how do you take a trade from this place? When you draw your trend line, you see that market has come to this point, broke below this support level, came back up to this resistant level. Retesting it, you see that there's a confirmation here. There's a trend line confirmation that okay, price has retested this psychological level, this psychological level or resistant level. Now you're going to take a trade from this point, a sell trade. You're going to sell the market to the downside. Okay, so you take your trade from this point. So your confirmations were you used a trend line and the retracement strategy to take this trade. So taking this trade, you sold it to the downside, to the next support level. Okay, to the next support level. So your risk to return should always be 1:2. So if you see here, you see that it's the risk to return was 2.14. okay, so it should be 1:2. So you'll be risking 1 to make 2. So I hope you understand now how to draw a psychological level, support and resistance levels, and now you can also determine how to take a trade based on trend line and psychological levels. Combining these two informations, combining these two informations and using it to take a trade entry or to place your orders in the market, regardless of the currency pair you are trading. Okay, so thank you for watching, and then I'll catch you on the next video.